Good morning. This is Tony Butler with Insurance Agency Marketing Services, and I have with me today Kip Walker from Mutual Trust. We're going to be talking about infinite banking and some other things with everybody this morning. I hope everybody's healthy and doing well. Abide by social distancing. And again, thank you for joining our webinar. Before we get started into the meat and potatoes of the webinar, I just want to go over a few introduction slides with you guys. Um, so here we go. So first off, we do have a referral program here at IAMS. So if you are a writing agent with us and you do refer another agent to us and they get appointed with any of the carriers that we work with, we do provide you with a $50 referral bonus. In addition to that, any subsequent business those agents write, um, as a thank you, we offer 20 basis points on that business. Again, that's just a way to say thank you for providing us with that referral and helping us do business with other agents. We also have a new producer bonus. That's for agents that have recently gotten appointed with us. Within the first 180 days, we've got 5 different levels, as you see here. This is paid premium. So depending on what level you want to achieve, there's additional bonuses for you on that. If you have any questions or specific questions in regards to the new producers builders, please don't hesitate to give us a call. I'd be more than happy to go through that in greater detail. We also offer you back office support here. We like to say we like to help you work smarter, not harder. What that means is um, we're going to help you, the agent, from submission to commission. So we do offer paperless contracting, which is huge because, as you know, if you've ever submitted an appointment with the carrier, that can be a painstaking process. So we do offer that, and that is done electronically. We also have the ability to run life and annuity quotes or illustrations for you. In today's environment where you're not able to get in front of clients, we're seeing more and more agents, and we're talking to more and more agents about doing things virtually. What that also means is doing electronic applications. So we have a couple of platforms for that. One of the platforms is Firelight. You can get on Firelight through our website once you get registered. And as you see here on the left, these are the carriers that are available to you on Firelight. To the right, these are the carriers that are going to be coming soon. If you have questions on getting registered on Firelight, or if you're already registered and you need some assistance with utilizing that tool, please give us a call. We'd be more than happy to help you with that. We also have a creative marketing solutions team. They're going to help you in regards to helping you grow your business, whether it's turnkey, agency, or digital solutions. What that means is that creative department can help with professionally written handouts or flyers, help you with logo designs or redesigning your logo, help you with business cards. And if you're looking to get into the digital marketing space, it also, or they can also help you with personal website assistance, digital marketing strategies. So if you have any questions regarding this, or this does interest you as far as helping you grow your business, please give us a call. We'll get you over to one of our creative individuals and they can help you out with that. Our website is a 24/7 website. We've got excellent sales tools available on the website. Now, I mentioned Firelight for electronic applications. We also have iGo eApp that you can submit electronic applications through our website. You can access forms on our website, whether it be applications or product guide information. And for you agents that write life business, we do have a quoting tool that allows you to run your own term quotes or universal life quotes. Website is www.iamsinc.com. If you have questions regarding navigating through the website, be more than happy to help you with that as well. We also offer a retirement analyzer for our agents. Now that retirement analyzer, we can offer you on a free 30-day trial basis. And what that analyzer does is it helps you answer questions from your clients, such as, can I continue my present standard of living into my retirement years? When can I retire without running out of money? Or how would it affect my family if I were to die prematurely? Uh, Once you've fulfilled that 30-day free trial basis, we do offer it on a free basis if you are producing at least 250,000 in annuity production or 250,000 in single premium life production. If you have questions regarding the retirement analyzer or what the cost would be, please feel free to give us a call, and we'll be able to provide you with additional information on that. We also have IAMS Wealth Management Team. That wealth management team is there for you as the agent to help you with your higher net worth clients, um, those individuals that have more investment assets. They can help you increase your revenue, improve client retention, and strengthen your relationship with clients. If you have any questions regarding the IAMS Wealth Management uh, team, feel free to give Charles Jr. or the team a call. They'd be more than happy to help you out with that. I think we got a polling question on that. Let me double check. Uh, no, we do not. I apologize for that. We do for the Life and Annuity Academy. We had one scheduled for May, looks like the 6th through the 8th. Do not think that that's going to happen based on the COVID-19 situation. But just to give you a little background on the Life and Annuity Academy, it is a 2-day training that we pay for. We pay for your lodging, we pay for your travel. And what we do is we discuss top sales ideas and strategies. We go over sales software tools. Um, if you're interested in the Life and Annuity Academy, I don't have information on when the next one's going to be, but can definitely get that out to you once we know. Um, and again, that's going to be based on our current environment. Let me give you a polling question here. So if you have questions or would like additional information, please respond to that and we'll get that out to you. I'll leave this up for a few more seconds here. Okay, we'll go ahead and close that out. Just a few more slides. We have a few trips that are scheduled for later this year and in 2021. The first one is the IAMS Athene 2020 Marketing Summit. That's supposed to take place August 26th through the 29th. The invitational period is July 1st, 2019 through June 30th, 2020. For more details, please give us a call. And then we also have Paradise on the Pacific, which is scheduled for March 7th through the 11th of 2021. Qualification periods July 1st of 2019 through December 31st of this year. Qualification requirements are 3.5 million points. And then we also have Shores of Serenity. That will take place March 11th through the 14th of 2021. Qualification periods are the same time period, July 1st, 2019 through December 31st of 2020. Minimum qualifications for this is 6.5 million. 8.5 million or above gets you both trips. Again, for more information on that, feel free to give us a call. If you need the status of where you're at on that, we can also provide you with information on that as well. So with that, I am going to turn this over to Kip. So Kip, you there?
I am here, sir.
Okay. So I'm going to make you the presenter. There you go.
All right. Thank you. Can you see my screen?
Yes, I can.
All right. Well, thank you very much, Tony. I really appreciate you hosting this call today, and thanks to everybody for taking the time to join in. This is a crazy time, and I'm just continue to be amazed at how quickly so many of you have adjusted to this new world. Our business is down, but not nearly as much as I had anticipated it would be. So thanks to you all for that. for those of you who write with us. And it's also important for me to mention that Mutual Trust has no limits on doing remote business. There's absolutely no limits on that. So as you go through this time, and maybe some of you are kind of still adopting the new systems and things like that to conduct your business remotely, Mutual Trust will be making some announcements on how we are going to be adapting as well. And I'm just going to give you a little heads up. In addition to the fact that we've never had any limits on remote business, we'll also be adjusting our underwriting. So look for information on that, ways to not have parameds for some cases, and ways to avoid parameds for as many cases as possible. There's going to be some hard numbers coming out behind that, but I want to give you a heads up on that. Also, we do not have an e-app, which we're going to get one in the fourth quarter. We keep being reassured that that's going to happen. But we do have DocuSign and a PDF fillable app. So what's going to happen with that is we're going to take care of getting those signatures using DocuSign. Prior to that, you had to get an account, a DocuSign account yourself, so that you could use our DocuSign. But we're going to take it in-house, and we're going to give you a lot of help with that. So while it's not an e-app, it's the next best thing. And I want you to, just realize that Mutual Trust can do business remote. We take all the remote business you can do, and we can take care of the signatures as well, help you out with getting those signatures as well. So, but I appreciate you guys listening in, and again, all the business that you guys continue to write. It's amazing, and it's an important work. It's an important job that we're doing, especially in times like these when they're looking for guarantees and reassurance, and a lot of their other advisors aren't calling them, but our advisors are, and they're getting a lot of great feedback for that. So with that, I want to bring a new concept to you today. And if you're not, writing a lot of business, maybe this is something that you could keep in the back of your mind for when things get back to a little more normal here. But for, some of you, you may have heard about this, or maybe talking to some individuals who this may be a good fit for. So with that, I'm going to launch into the infinite banking concept, and we're going to take a look at the concept at a high level. I'm not going to make anybody an expert in anything in 20 minutes, but I do want you to acknowledge that the concept works, that you have clients that it'll work for, and you know who to pick up the phone and call to ask some questions, maybe discuss a case. So please, if you think of anybody this might be a good fit for, write down their name, and that'll be the basis for us moving forward and turning this into a productive call. So I'll do an introduction of infinite banking. We'll look at the history and then who our clients are. And we'll also show you how Mutual Trust supports the infinite banking concept. We can never be the oldest company. We do not want to be the largest. We must always be the best. This is a quote from one of our founders, Edwin Olson. And this quote highlights how Mutual Trust does not try to be all things to all advisors and all clients, because then we would be the best at nothing. So we have focused singularly on whole life insurance, participating whole life insurance. We are a participating company, or a mutual company. And that has worked out very well for us, that focus on just whole life insurance. We do have term. We have a 10, 15, 20, and 30-year term. But those are sold with the intention of eventually converting some or all of that to whole life down the road when the client's financial situation changes. Mutual Trust has been around since 1904, and we have an excellent track record of paying dividends every single year since then. However, in the end of 2015, early 2016, Mutual Trust was a small, scrappy, insurgent life insurance company, and we were A-minus rated at that time. Interest rate environment has been difficult for small carriers, and we were, it was a struggle. Well, while our sales were good and everything, it was just getting to be a difficult environment in that low interest rate environment. So At that time, at the end of 2015, we merged with another participating mutual company called Pan American, and they're based out of St. New Orleans, Louisiana. They have a very strong international group business, international life business too, and they had a strong domestic group business, but they were missing that life distribution in the United States. So at that time, we decided to merge with Pan American. We represent roughly 25% of their overall business, and we now round out their balanced portfolio. They have a lot of very cash-rich businesses around the world, and Mutual Trust has a steady growth but cash-draining business. So when that merger occurred, it was textbook because we were able to provide some stability in their growth, and they were able to provide a lot of money for us to grow as quickly as we wanted to. The result has been growth in sales of 15% compounded annually. That's pretty healthy, and when you factor that in, we got 30% growth last year. That's in an industry growing by 1%. So it's really a great time to be looking at Mutual Trust. We have a lot of great things going on, and the infinite banking concept is one of those systems that has been a big part of that success. So now we are a company that has $6 billion in assets, $1 billion in capital and surplus. We are now A-rated by AM Best and Fitch. And those A ratings came within a year after our merger. So that was just a testament to the power of that merger. It's not how much money you make, but how much money you keep, how hard it works for you, and how many generations you keep it. That's Robert Kiyosaki, the Rich Dad, Poor Dad author. And I like that quote because it really encapsulates what we're trying to do. We're trying to help families grow their wealth, grow their generational wealth, have a better retirement, have a more secure retirement. And these are all things that we're focusing on. It's not just about the death benefit. It's about the living benefits as well with whole life. What does J.C. Penney, Walt Disney, Ray Kroc, and Doris Christopher have in common? Well, they all use their life insurance policy, cash value, to help finance their businesses. Walt Disney used his whole life insurance cash values to help establish Disney World or Disneyland. And that was at a time when his creditors were tapped out. He couldn't get any money, and so he had to use his life insurance policy. J.C. Penney used the cash value from his life insurance policy to get through the Great Depression and meet his payroll obligations. Ray Kroc used it to establish McDonald's, and Doris Christopher started Pampered Chef in her garage with a policy loan. So this is not a new idea by any means, but what we have done is bring it to a broader market. So what is the infinite banking concept? A financial principle based on U.S. tax laws and insurance contractual guarantees. Well, what does that mean? It means it's a pool of capital that the clients can access for any reason. And it's a pool of capital and a strategy that allows the client to recoup some of we got to use the right words here. We got to recoup that interest that they're paying away from themselves, and also save on the taxes that they would have otherwise paid. So it's great for that access to capital that's so important for whether you're an individual or a business owner. And so where are they keeping this capital? If they're not getting a loan, they're storing it somewhere. So they got to make sure that it's liquid enough. It needs to be guaranteed. They need to know it's there, and it's not going to go away when they really need it. Is it taxable? Are they getting taxed while it's trying to grow? Is it leveraged? Is it doing anything else other than earning some interest and getting taxed? Will it still grow if they use it? And that really goes to the strategy of the infinite banking concept. So typically where they're storing these funds are places like CDs, savings accounts, typically money market accounts. And the last two are just, saving money and putting it cash, which is not really realistic. And so these are safe instruments, and they're guaranteed, and they're accessible. A little bit of issue maybe with the CDs as far as accessibility goes. But these instruments aren't really doing anything else for you. They are safe in providing a guaranteed return, but that's all they're doing. So we feel that participating whole life insurance is not, if not the complete alternative, definitely an additional strategy and product to have in your portfolio. It provides those guarantees, that certainty. They have that liquidity, use, and control of their money, which is very important. There are never any surrender charges for whole life insurance. The way we design the product is for it to have high early guaranteed cash value. We don't design it with just all base policy premium. We use a paid up additions rider, which, if you're not familiar with whole life insurance, it's a very cash rich rider and very liquid rider. So you put in, let's say, for example, $100 into that, you're going to get a little bit of death benefit, and about $94 will immediately show up in the cash value. So there is that load and expense in there. $94 shows up. And at that point, it starts earning guaranteed interest. And in this case, it's 4%. It's 4% on the PUA rider. And the base also has a 4% guarantee interest rate, and that's net of charges and fees, of course. But it gets more efficient as time goes on. So you'll see that cash value growing in the base policy, but it'll be much faster growth of the cash value in that paid up additions rider. So typically you'll have a policy roughly about $10,000 premium. We'd like to use that number. The average premium for this kind of business is around $8,000. But let's use 10 for nice round numbers. So you would have typically $6,000 of that $10,000 going into the base. Into the PUA rider, and $4,000 going into the base. So with whole life insurance, what you would see with that design is almost $6,000 in cash value first year. That is, that's not typical with other life insurance products. Many times UL and products like that, they don't have any cash value in the first few years. But with this design in whole life insurance, you have that cash value there. You know it's going to be there, and you can access it immediately. And so it's not your grandfather's life insurance, although that would work too. But we've designed it so that you can get going right away with this concept, not have to wait a few years before you can actually start using it. So a concept will only work, or a solution only works if we can identify a problem. For businesses, that problem is need to access capital. They need to have access to capital. How do they grow their debt? How do they own their debt and recoup it and help grow their own wealth? How do we deal with the limits on qualified plans? Qualified plan is nice, but you really only win when taxes are lower when you take the money out. We put the money in, we get a tax deduction on it. Or we don't have to pay taxes on it, I should say. And then, we go along and it grows tax-free, and that's great. But the government's along for the ride there. And so if down the road, when we're still in, $25 trillion in debt now, that whole thing's accelerating. We have pretty low taxes right now. Are you really going to be in a lower tax environment when you retire? Chances are no. But let's take some of that uncertainty out of it, and let's recoup, take some of that money and put it somewhere else. We want to use our qualified plans, but let's maybe not go beyond the match or something like that. How do we keep more of what we make? How do we keep that money that's going out the back door from going out that door and recoup it and put it back in our own pockets? How do we cope with life's emergencies? Things come up. Life doesn't happen on a schedule. Emergencies come out of nowhere, as we've seen recently, right? Currently. So how do we make sure that we have access to capital when we really need it? What is the biggest financial problem, though, facing Americans? If you ask them, many would say, how do I save for retirement? And in many cases, how do I also help my kids pay for college? This is the biggest problem facing many Americans, most Americans. What is the issue that is stopping them from achieving these goals? In many cases, it's the amount of interest that they're paying every year. About 34.5% of every dollar spent is on interest. And as you can see, we're pretty much tapped out on resources as far as cost of living, housing, autos, and the interest that we're paying on all of those things. And that doesn't leave a whole lot for saving. So we've got to meet our clients where they are. And it's difficult to ask somebody to save more when they feel they're saving as much as they can. But what we can do is find ways for them to recoup money in areas where they don't realize they're spending it unnecessarily. If we can help somebody save on interest, that can have a huge impact versus just trying to offer them 1%, 2% more on their investments. If you take a look at car loans, credit cards, mortgages, and you look at the interest rate is what it is, 7% for a car, maybe 5%, maybe 0. That's great. If they can get a 0 car loan, perfect. Credit card, they may have 12% up to 20%. But when you look at the volume of the interest, the volume of interest going to, or the volume of each payment going to interest, that's really where this really is highlighted. If you look at the amount they're paying every year, it's $15,000 in interest, and that's $300,000 over 20 years. If we could recoup half of that or a third of that, that could have a substantial impact in our clients' retirement, because we're not just going to be recouping that interest. That interest is then going to be put into their own pocket, their own infinite banking concept, and it's going to earn interest on top of that. So it's more than just the interest dollars themselves. It's the opportunity to earn additional interest on that money once you recoup it. There are different ways to finance, and we finance all of our major purchases. A major purchase being we finance things that we cannot pay for with our monthly disposable income. Everything's going to be financed that we can't pay for out of our pockets. And there's 2 ways to finance. You're either paying interest to a lender, or you are taking money out of a savings account and losing the opportunity to earn interest on that money and then putting it back into the account. And if you actually take out a loan for $10,000 and pay it back at 5% interest over 5 years, the cost is exactly the same as the person who takes the money out of a savings account, and assuming that savings account's earning the same interest, and assuming they pay it back over the same period of time, when you factor in the lost opportunity cost of that, the cost is exactly the same. It's just how math works. And so if that's true, is there a better way to do this? Do we want to either be below the 0 line and trying to get back to 0 for the person who takes a loan? Do we want to be the person who saves up $10,000 and then takes themselves down to the 0 line and tries to get back up to that $10,000? You're really just spinning your wheels here in either case. So there is a third way, and that's a key component of the infinite banking concept, and that is to collateralize your purchases. So you take money as a loan against your asset. Now, you could do that with a bank. You could pledge your savings account as collateral and let the savings account grow, but you're not getting any of those additional benefits, the life insurance, the chronic illness benefit that we have that's issued on all of our policies, table 4 or better. It's no premium on that. It's just additional benefit. But then you have to go to the bank or call them or whatever and apply for the loan. They're still going to look at your income. It's still going to go on your credit report, and they have control over when that's paid back and how it's paid back. And when you need money, many times, how great is the bank about lending us money when we really need it? A lot of times that can be a difficult situation. Plus, if you've gone, I know many of you have gone through the process of getting a home equity loan like I have fairly recently, it can take a long time. They say 2 weeks, and you're like laughing because that's not going to happen. It takes like 2 months, but by that time, interest rates have changed, and it's a headache. But when you set this up, your infinite banking policy up, the money is there, and you can access it anytime. It's guaranteed to be there. You can repay the loan on your own schedule. It's important to repay loans as quickly as possible to conserve to prevent interest going out the door. But you do have your own schedule that you can develop and pay your interest back. If you need to skip a month, you can skip a month. But it's not going to show up on a credit report. It's a 1-page form. You're not qualifying for a loan. The loan is guaranteed. You can just fill out your request, 1-page request, send it in. You get your money in about 3 days. You have that liquidity, access, and control. The money is growing tax deferred in the policy and can be accessed income tax free retirement. Albert Einstein once said, "Compounding is the eighth wonder of the world." So if that's true, how often do we want to interrupt compounding? Well, we want to avoid interrupting compounding as much as we possibly can. And with this concept, that's what you're doing. You're never taking yourself off of the compounding curve. Your money just continues to grow at that 4% interest, and you're earning dividends every year, and that increases the benefits as well, because that increases the death benefit and the chronic illness benefit that you can access when you really need it, when you get sick, need in-home care or nursing home care. There's no additional fees. There's no red tape. Like I said, you can get, well, I didn't say this before, but we have clients who send in loan requests with their life insurance application. And so once the money is settled in the account, it takes roughly 10 business days, the loan gets sent out to them. We have no limits on loans, frequency, or amount, as long as you got the cash in the policy to be collateralized. So who are we focusing on? Who are our clients for this concept? Well, really, in a word, if you have a household with $70,000 or more in income, they're your client. Small business owners, doctors, dentists, they really appreciate this. Real estate investors love this, as far as having that access to capital to invest in properties and paying themselves back into their policy, and then buying more property. Gets rid of that red tape. Just, clients who just don't want to deal with all the red tape of getting a loan from a bank. Just those who want to have liquidity, access, and control of that money, of their money, in a different alternative asset. And our clients do need to be insurable. This is life insurance, and they typically have a desire to protect their family. As long as I'm alive, my kids are going to be in the safest cars and be in a nice house, and I'm going to help them pay for college and all those things. So, there's a lot of families out there who really appreciate this kind of concept. So with whole life insurance, it really is a great tool for this. It's the best tool for this, as Nelson Nash, who really popularized this whole concept, talks about. There are no escape hatches with whole life insurance. It is what it is, and it's always understated. The guaranteed column is growing every single year in the cash value, and has to match the death benefit in most cases at age 120. So if you have a $100,000 death benefit policy at age 120, the cash value has to be $100,000. Of course, there's different tracks to get there. You can spread those cash values out until the later years. You can have them grow more quickly and then level off a little bit, but still grow. So we kind of take that second approach, where we really increase the cash values as quickly as possible, and it still is very strong growth in the later years as well. But having that early cash value growth allows the client to use this concept to a greater degree more quickly. And with the paid up additions riders, you have a single paid up additions rider and a flexible. As I said earlier, the paid up additions riders are very important for this concept. Mutual Trust arguably has the most flexible paid up additions rider in the industry. You have a $500,000 single that you can dump in a lump sum, 1035 exchanges, things like that. And you can go higher than 500,000, on a case-by-case basis. You also have our Flex PUA rider, which is just an annual version of the same thing, where again you're putting in anywhere from $100 up to $100,000 anytime. It doesn't matter what your mode is on your policy. You can just put that money in any time. As long as you get the $100 in, that's all you need to do to keep it active and fundable up to age 90. So really, that flexibility and the ability to fund those riders is very important. And it's not just about how we design the policy; it's about how we let you use it. So again, the ability to fund it however you want, the PUA rider, and then also those loans. Our policy of having immediate access to loans and no limits on that really are key to this concept. It's a very important part of this concept as a loan. So we really are very well designed to do this business. We've been doing it for a very long time, and it is, as I mentioned at the beginning, no small part of our success. The product that we use is called Horizon Value. That is our flagship product. It's a product we use for this concept. So that would be the product you would be looking at if you wanted to take a look at some illustrations and designs for your clients or your business owners. There are a couple additional cool features that I would just want to touch on real quick. Waiver of Premium. That is the waiver that allows the client to continue funding their policy even if they can't work. So if a client is unable to do their own occupation for 2 years or 5 years, depending on which of the waivers you pick, then mutual trust will still make those premium payments. After the 2-year or 5-year period, the standard goes to a comparable occupation. So a little bit harder standard to meet, but still, if you're a brain surgeon and you can't do brain surgery, but you could still be a good internal medicine person or just a family doctor, then mutual trust is not going to pay the premiums. But if you're a brain surgeon and you're only able to work at a restaurant, then we're still going to pay those premiums for you because that's not a comparable occupation. Okay, and so just think about how powerful that is, though. With a very nominal additional fee, you're introducing more guarantees, even more guarantees into your client's portfolio. Again, we have others offering more and more risk. We're offering guarantees. This portion of your retirement plan, your financial plan, is guaranteed to happen even if you can't do your own job. Now, we also have a similar waiver on the paid-up additions rider. We call it the disability benefit rider. And this allows the client to fund that PUA rider even if they, again, can't work. So if they have these two riders on, they're guaranteed that the $10,000 or more that they're putting into this policy is going to continue to happen even if they can't work. And that when you think about how powerful that is, the client has so much risk in their financial plan, depending on them continue to keep their job and make the money they're making and not get sick. And so many people get sick and have short-term disabilities before they retire. This portion of their portfolio would be secure. And with that paid-up additions rider, the cool thing is that, let's say you are paying $6,000 into the rider and $4,000 into the base, and the client becomes disabled, unable to work. If the client was, say, in sales and they were only funding the minimum on that PUA rider, $100, they weren't funding the full $6,000. If they became disabled, mutual trust would fund the full $6,000, not what they were paying, but what they are eligible to pay. And so that's very powerful because they were funding $100 into this rider, and now it's going to be funded at $6,000 if they can't work. So again, just a really powerful way to help them put guarantees into their financial plan. Plus, as I mentioned before, you have the chronic illness rider. You also have the terminal illness rider, which is pretty standard in the industry, accelerating that death benefit for terminal illness. We are very committed to these concepts, including having a dedicated coordinator. His name is Richard Weiserick. Great resource. He's also our business coordinator, so he's a real guru. He's IBC certified. You have to take classes and a test and everything. So he's a real fantastic resource for infinite banking concept questions. We have a software module in our illustration software. We have a lot of training programs, including video, web presentations like this, and materials that can help you introduce the concept to your client. So I hope that you have identified a couple clients who may fit this profile. Please set up a call with Mutual Trust or get with Tony, and we can set something up as far as answering your questions, getting some illustrations out to you. You don't need to be contracted with us to get illustrations and ask questions. You can just call us. Give it a shot. Give it a try. Like I said, these cases are pretty big. They're like $8,000 to $10,000, so it doesn't take too many of them to move the needle. And we have had advisors who were doing no business with Mutual Trust all of a sudden adopt this concept, and all of a sudden they're qualifying for our conferences, which are very nice and fantastic locations and lots of fun. So I urge you to give it a shot, give Mutual Trust a look. I know it may be early to be talking about conferences now in this environment, but our plan is to go to Ireland in 2021. So we wine and dine our advisors. We have a great time. I've been on several of these, and I always hear that we have the best culture as far as being inclusive. There's not a group of new advisors who make it and then the older advisors who have been many times. It's everybody just kind of hangs together, and it's a great atmosphere. I really appreciate you guys taking the time to listen to this concept. I hope that you got something out of it, and stay safe out there, and I'm happy to answer any questions that you have. Tony?
Thanks, Kip. Do have one right away. Could these slides be emailed to us?
Yeah.
Agent's asking.
Happy to do it.
All right, let me get this back over to my screen here. Can you see my screen?
Yes.
Okay. So I'll open it up for a couple more questions here. So the person that asked that question, I'll make sure to get that out. Are there any additional questions? Okay. Do have a couple of polling questions. So if you would like more information on today's topic, if you could please respond to this polling question, make sure to get that information out to you. It looks like we got quite a few people that want some more. Okay, I'll leave this open for a few seconds. And I got another question for you, Kip. Looks like someone has a question here. All right, let me close this out. Okay. How can you become IBC certified?
Oh, that's a great question. There's a website you have to go on. Let me hold on. Let me get that address for you because I don't want to give you the wrong address. There is a website that was established by Nelson Nash. He's no longer with us, unfortunately.
Do you need me to go back to your screen for that?
Nope. No, I'm just going to type it in so I can remember which one it is.
Okay.
InfiniteBanking.org. InfiniteBanking.org. There is a fee for taking that exam. You can also find a lot of resources. On Infinite Banking. It's called the Nelson Nash Institute. Once you get there.
Okay.
Nelson and they Nash have resources. Institute. Yes. But again, that website's InfiniteBanking.org.
Okay. All right. So with that, I don't see we have any other questions. If you guys do decide that you do have questions after this call, you can reach out to me. We've got 4 life sales directors, myself, and here's my email address. We have Reed Starks, Jess Riley, and Jason Dover, and here are their email addresses. You can reach us here at 800-255-5055, and you can ask for one of us, or you can shoot off an email to one of us, and we'll be more than happy to answer your questions regarding mutual trust or any life questions outside of that as well. Lastly, I'd like to point out that we do have for the month of April a virtual sales incentive. It's a $500 virtual sales incentive. So you can get a virtual web package with this. That's a webcam, microphone, setup assistance, and a virtual business guide. For details, please give us a call. We'd definitely like to discuss how you can get that package. And with that, last question. Okay. Nope. They just wanted to know about the webinar. And yes, I'll have a recorded link for this to provide for you. So with that, I hope everybody stays healthy, continue to practice social distancing. Kip, you have anything to add?
I just wanted to mention that we also support the infinite banking concept financially. So if you adopt one of the selling systems that are associated with infinite banking, we reimburse up to $1,000 if you write 3 cases within the first 3 months for $10,000, what we call new business credit. Within the first year. 3 cases in the first year after adopting the system. You can get $1,000 back on the cost of the system. Plus, you're double dipping because we also have a program called education reimbursement that these systems qualify for, and that provides an additional $1,500 in reimbursement. So we really put our money where our mouth is in support and training, and that's it. And I really appreciate everybody taking the time to join us today, and stay safe and healthy, and happy selling to everybody, and have a great rest of the week.
All right. Thanks, everybody.